This is the last market update for 2024, and it isn't quite exactly what we were expecting. The whole back half of this year has been a little bit interesting. So in this video, I'm going to break down what we've seen over the last month in our December 2024 housing market update. Now, the first thing I'm going to talk about, and I've got some stats pulled up here because I want to make sure I got this, is the new listings coming to the market. Now, this fell off of a cliff this last month, which isn't terribly surprising. We had the election, we have holidays, and in November, December, we always see the number of listings go way down. It just went way further down than a lot of people were expecting. We actually had 15% fewer new listings come to the market this year in this month than we did last year, which that's a little bit surprising because last year was honestly so low. This will definitely happen until January 1st, and then we'll see a spike of new inventory coming back to the market, which, as you can see on this chart, happens every single year. So there's not too much surprising here other than a faster pullback on the amount of new listings coming to the market. All right, so that brings us to available listings. Now, this is actually going down, which is a little bit odd, but not terribly surprising. But we are 20% above where we were this time last year, which is fantastic news. We have more available listings. We're going in the right direction, just not nearly as fast as honestly I would have expected. If you've been following along on these market updates, we've been expecting to see way more homes come to the market this winter, and it's just not happening. We're seeing a lot of buyer demand, a lot more buyer demand than we really would have expected, but we're still up 20% over where we were last year this time, which that is going to continue for sure. Now, that leaves us to days on market. So days on market is a very interesting one because it's the same. It's still 17 days on market, which is what it's been last month. And then before that, it was 15 days, 14 days. It really has not changed very much. And it just keeps enforcing the fact that the only homes that are selling, and I say only lightly, the only homes that are selling look good and are priced right, and they're selling fast. There are a lot of homes that are sitting on the market for a long time, getting almost no activity and no offers. So if you are a buyer in the market right now, towards the end of the year, into the beginning of the new year, look for those properties that have been on the market for 30, 60, 90 plus days. Those are going to be your screaming deals for the next foreseeable future. Now, if you're a seller and you are on the market for longer than the average for your, remember, this is all of Orange counties. You want to know your price point, your city, your everything. If you're on the market for longer than you think, it's probably because you are either, your listing might not look so great, either that it's wildly under marketed, which is very common, or maybe the house needs a little bit of love before it should have gone on the market. Or it's overpriced. That is what it is. And also, I guess the fourth thing could be access. You could have it look good and be priced right and be beautifully marketed. And if you have no access to the property, like if you're a seller and you're not letting people see the house, it's not going to sell. So this is something that we expect actually to go down once the new year comes. Now, all of this comes together to lead us to price. And price, yet again, really hasn't changed. It was pretty much flat, but I will zoom out on this one. So normally on these market updates, I'm making these for the person, especially who's watching month over month over month. And if you're not on this, go to onyxhomes.com. Right on the homepage is a place to drop your email to get on our email newsletter where we send out this market update every single Friday. Every single month we send a new market update. But price is flat again. So if we zoom out, price is up 5% over the year. Now, year's not over, I understand that, but it's really nice to see that on a year that was a little bit interesting, we had prices go up the first half of the year and down the second half of the year, which was exactly what we had kind of talked about. It just went up faster and down faster, really, than a lot of people expected. But at the end of the day, we don't look at price changes month over month. We look at price changes year over year, and 5% is the average for Orange County. So what was an interesting year if you were in the market at all actually ended up being a really boring year at 5% appreciation. Again, the year's not over. I know that. I'm just sharing with you that 5% appreciation is totally normal. Now, remember, 5% appreciation when median home price is $1.1 million is a $50,000, $75,000 increase. So it's a sizable increase in equity on that median home price. Now let's round this off by talking about interest rates, and then I'll break it off with a summary. So interest rates have been, again, kind of like a jumping bean. They've been going back and forth from the 6-ish range, kind of hitting the ceiling of 7 and dragging down close to that high, really, really high 5 range for the last, I don't know, 90 days. Now, with everything that's going on in the economy is just overall doing better than a lot of people were expecting, which is keeping rates higher. Now, while that is a good thing, because the economy is doing well, it's a bad thing for mortgage rates. So mortgage rates have this weird thing where the better the economy is doing, the higher rates. I guess I should do it this way. And what really needs to happen for interest rates to come down is us to see less pressure on inflation. Now, if you're not a numbers person, I won't bore you with it, but basically the better the economy is doing, or the longer the economy does well, the longer we're going to have these higher interest rates. Now, I'm going to give you a summary as well too. So 2025 is going to be an interesting year. Here's my hot take on interest rates. There's 2 points here. Number one is we will see interest rates come down significantly over the next 2 years. The second hot take is that we do not know how long or when they're actually going to come down. Regardless of what any lender is going to tell you or any real estate agent is going to tell you, I've been saying for the last couple of years that I would expect rates to stay high, while a lot of people said they were expecting to come down. Well, they didn't. They're still high. I'm not saying like I'm right. I just think that it's gonna take longer for rates to come down. But I can pretty much with 90% certainty say that we're gonna see lower rates over the next 2 years. My point here is anybody that's tried to speculate on interest rates has lost over the last couple of years, really a handful of years. We still have clients that are waiting for interest rates to go back from 3 to 2.5. And we have people that are waiting for rates to go back down from 4 to 3, and from 5 to 4, and from 6 to 5. And if you're just waiting for a specific number on the interest rate, I would urge you to go to a mortgage calculator. We have one on our website. So if you go to onyxhomes.com and click the finance button, right, play with the mortgage calculator, and there's a video on there that explains how to use it. But basically what my point is, I don't want to say the price is irrelevant, but for a lot of people, the price is irrelevant. When I was buying my house, the price was irrelevant. I had a payment that I was comfortable with, and I had a certain amount of down payment that I was comfortable with. And whatever that price came out to was my comfort zone. And that is for most home buyers, unless you're paying cash, which interest rates don't matter then. So that's my number one piece of advice is if you are in the market for buying, really figure out what your comfort zone is and figure out what your purchasing power is today. And then if you can kind of maybe sort of find something you like, I would go window shopping out of the market. Now, what we call window shopping is just go look at property and expand your search. So you're not trying to find the perfect house today. You are trying to eliminate the things you do not like. And then you're window shopping, you're narrowing down that search over time. Now, if you can find something you really like and it fits the comfort zone, maybe it makes sense to buy, maybe it doesn't. That's for you to choose. But that's my best advice on helping hundreds of people through the home buying process. That'd be my best bet. And if you're a home seller prepping for 2025 and you're thinking about listing your home, I would highly recommend going back and listening to the part that I talked about on looks good, priced right, marketed well, and availability. Those 4 factors are crucial. We just had a seller that was going to, or I should say they were advised on investing about $125,000 into their house to put it on the market. And they were told they were gonna sell it for about $125,000, right? So $125,000, and then it would sell for $125,000. And we walked through the house and they wanted a second opinion, smart. And we walked through the house and we didn't think they needed to spend anywhere near that money. Honestly, I didn't think anything they spent over 40 grand would even make sense. So we walked through the house, we advised that they spent about 35. They spent a little bit more than we recommended. And the house sold for 125. So that extra, what is that math? 80,000, 75,000, whatever that math is, that extra $70,000, $80,000 of upgrades they were advised to do would not have done anything. And it's because it looked good, it was priced right, marketed incredibly well, which is what we do, and then it had a ton of availability. So that's my case study, or that is a case study, I guess. But that's my advice for sellers, is to get prepared ahead of time. So there's 2 major mistakes that home sellers often make, and then I'll wrap up. The first one is they often wait till the very last second to get an agent involved. That's number 1. Number 2 is that often, probably because of number 1, they end up doing a lot of repairs on their house that they just did not need. If this couple would have done the $125,000 in renovations, they would have literally lost that extra $70,000 or $80,000. They would not have recouped that at all, no way. So that's my advice, is just to reach out sooner than later. Even if you're thinking about selling in the next 12 months, even 2 years, just reach out. And if you don't want to talk to somebody, you can go to onyxhomes.com/ just click the sell button and you'll get an automated home value. And then we will reach out to you with a custom market analysis. And if you want to go further than that, you can. If you don't, that's totally fine as well too. But anyway, my name is Christian. I hope you found this valuable. I will see you in the next video.